Do you dream of saying goodbye to the daily grind long before the traditional retirement age? Do you envision a life filled with travel, hobbies, and pursuits you never had time for, all while your peers are still stuck in their cubicles? If so, you're not alone. The financial independence, retire early, or FIRE movement has captivated the imagination of countless individuals seeking to reclaim their time and live life on their own terms. But for those on this ambitious path, a crucial question arises: can a platform like Wealthsimple truly be your co-pilot on the journey to early retirement? It's a question that deserves a deep dive, because early retirement isn't just about accumulating a nest egg, it's about strategically managing that wealth to last decades longer than a conventional retirement. It's about navigating market fluctuations, optimizing taxes, and ensuring a consistent income stream when your primary source of earnings shifts from a paycheck to your portfolio. So, is Wealthsimple a suitable partner for this demanding financial adventure? Let's break it down, looking at its strengths, its limitations, and how it aligns with the unique demands of the FIRE movement. First, let's establish what Wealthsimple is, especially for those who might be new to the platform. Wealthsimple is a Canadian financial technology company that offers a suite of services, primarily focusing on automated investing, often referred to as a robo-advisor. This means they use algorithms to build and manage diversified portfolios of low-cost exchange-traded funds, ETFs, based on your risk tolerance and financial goals. Beyond managed investing, Wealthsimple has expanded to include a self-directed trading platform, Wealthsimple Trade, high-interest savings accounts, and even tax filing services, Wealthsimple Tax. This all-in-one approach is part of its appeal, aiming to simplify various aspects of personal finance under one digital roof. Now, let's consider the core tenets of the FIRE movement and how Wealthsimple stacks up. The FIRE philosophy revolves around aggressive saving, disciplined investing, and a focus on minimizing expenses to reach a FIRE number, typically 25 times your annual expenses, based on the 4% rule of thumb for withdrawals. This means a significant portion of your working income needs to be saved and invested, and those investments need to be cost-effective and grow consistently over a long period. Here's where Wealthsimple shines for early retirees, particularly in the accumulation phase. 1. Low fees. One of the most significant advantages of Wealthsimple, especially its managed investing service, is its low fee structure. Compared to traditional mutual funds that often charge 2% or more annually, Wealthsimple's management fees typically range from 0.4% to 0.5% for managed portfolios, plus the underlying ETF fees, which are generally around 0.1%. For someone aiming for early retirement, every basis point saved on fees translates to more money compounding in their portfolio. Over decades, this seemingly small difference can amount to substantial savings, significantly accelerating your journey to financial independence. In the FIRE community, where every dollar is optimized, low fees are non-negotiable, and Wealthsimple delivers on this front. 2. Automated investing and diversification. For many aspiring early retirees, especially those who are busy building their careers and maximizing their savings rate, a set-it-and-forget-it approach to investing is highly appealing. Wealthsimple's robo-advisor service does exactly this. You answer a few questions about your risk tolerance and goals, and it constructs a globally diversified portfolio of ETFs. It automatically rebalances your portfolio to maintain your desired asset allocation and reinvests dividends. This automation is a huge time saver and helps to prevent emotional decision-making, which can be detrimental to long-term investment success. Diversification is key to mitigating risk, and Wealthsimple's approach ensures your investments are spread across various asset classes, geographies, and sectors, which is crucial for a portfolio that needs to weather multiple market cycles during a long retirement. 3. Accessibility and user-friendliness. Wealthsimple has built a reputation for its intuitive and user-friendly platform, both on its web interface and mobile app. For those who aren't seasoned investors or who simply prefer a streamlined experience, this is a major plus. The simplicity of setting up accounts, making contributions, and monitoring your progress can make the daunting task of aggressive saving and investing feel much more manageable. This accessibility can empower individuals to take control of their financial future, which is fundamental to the FIRE mindset. 4. Tax-advantaged accounts. Wealthsimple offers various registered accounts vital for retirement planning in Canada, such as Registered Retirement Savings Plans, RRSPs, and tax-free savings accounts, TFSAs. These accounts are cornerstones of any sound retirement strategy, offering significant tax benefits. RRSPs allow for tax-deductible contributions and tax-deferred growth, with taxes only paid upon withdrawal in retirement. TFSAs, on the other hand, offer tax-free growth and withdrawals, making them incredibly powerful for early retirees who might need access to funds without triggering immediate tax events. Wealthsimple's integration of these accounts simplifies the process of maximizing these tax advantages. 5. Passive income generation, ETFs and bonds. While Wealthsimple's managed portfolios primarily focus on growth through ETFs, these ETFs often hold dividend-paying stocks and bonds, providing a passive income stream. For early retirees, the transition from active income to passive income is critical. While Wealthsimple doesn't specialize in highly customized income strategies like individual high-yield dividend stock portfolios, its diversified ETF portfolios do generate dividends that can be reinvested for growth or, in retirement, used as a source of income. They also offer dedicated bond portfolios for those seeking lower risk and more predictable income. With that said, thanks for watching, and until next time.